Hey, welcome back. I'm Jason Jarvie with Realty ONE Group here in Surprise, part of the Phoenix metro area. And it's already a new month, so it's time to jump in and see where we left off in March and what April of 2023 is going to look like. Let's jump right into the data because, like I say, data is way more important than headlines, and you should be informed before you make any decisions. So what we're going to be looking at here is we're looking at interest rates. That's a primary point where most people start thinking about the housing market. Well, what's it going to cost me? And in the past few weeks, rates have been kind of crazy. You can see right now we're sitting at here, we're using Mortgage News Daily. It's just one of the sources that I use. At 6.44 for a fixed year, 5.8, 5.95, jumbo. You have FHA down here under 6% and the VA under 6%, which is pretty amazing. Now, I know I say that in jest because 6% is not that great, but I hate to throw the term out there. Historically, when you look back over the long term in time, that's actually pretty good. My first house was like 6.9 back in the mid 2000s. So yeah, 6% is not so bad to me. And I'm not old enough to have said, oh, I paid 18% in the 80s. That's a whole nother world. I hope we don't get there. I hope that we keep around here or better. It will make things much more affordable. But moving on from that, some of the news stories are already starting to point out that the markets are changing. Now, there are places around in the country that are not so great. Austin being one of them. If you look at the data there, their inventory is surging, their pendings are going down. It's not looking as promising. Where here in Phoenix, things are moving a little bit more in the direction of promising and not collapsing. And we see here calmer markets are home prices already done falling. Well, we've talked about this in the past few weeks that home prices here in the Phoenix area, they are in fact done falling. They bottomed in January and we've looked at those specific stats and they've come up since that point. And we'll touch on that here in a moment with the average sales price, but moving past that, mortgage rates fall for the third straight week. A blessing for home buyers? Yep, pretty much. We already started to cover that with where the mortgage rates are. So given all of this information on what it's going to cost to buy, let's look at what's actually happening here in the Phoenix market.
What's happening?
So there are a number of factors that we need to look at when we're assessing the condition of the market. We're looking at what sellers think and what buyers think. So right off the bat, we're going to start with active inventory. And I've been saying this since the beginning of the year, we are tracking down each week here. You can see we started pretty high with the orange line, orange red line. Here it connects over to the pink line, 2023. And yes, we did get a lot of inventory in 2022 at the end of the year as the market was shifting, but all year this year we've been dropping. Now let's throw in 2019 here to see what was happening at that point. And in 2019, we had quite a bit more homes, and we're actually following a similar pattern with the inventory dropping down, which is normal because at this time of year, we have a lot more buyers coming into the market. What's abnormal though, is when you look at the number of new listings coming on the market. That's our orange line here that seems to be plummeting off of a cliff. Go back to it there. And dropping down pretty consistently week over week. And what that is, that's an indicator of seller sentiment. Sellers aren't looking very promising right now at the market. Interest rates are high. 6 is crazy, but better than 7. So sellers have to think about where are they going to go? If I sell my house, am I just going to pay more and make a lateral move? That doesn't make sense to many people, especially when you consider the lock-in effect that they may have bought in 21, 22 and got, a 3 to 5% interest rate at a lower price point. So sellers not coming into the market, that is a big reason why when you look at the inventory number here, it's going down every week because we do have buyers. And buyers are going to be indicated here with the brown line as under contract. So they're scooping up those homes that are hitting the market. And you can see that right around here, week 6, we started to peak out for the year, which again, we're looking at normality here from previous years. We reach a point and we float. Now, when you look at the headlines here, this is going to be some of the lowest number of pending sales, historically speaking, in our marketplace. This graph here only goes back to 2015, so let's click them all, and yep, we're quite a bit below those other years. But if you were to do the same thing and click the graph to see all of the active listings from back then, I don't have the data here, but it would be higher in the 20,000+ range. So when you think about the numbers numerically speaking, the number of homes under contract versus the number of homes active, we're not in a totally horrible spot. We're actually more in a seller's market because there are more things going pending than they are coming on the market. That's part of our supply and demand, which is exactly what's driving this crazy graph here. So this one is showing our monthly average sales price per square foot. And you can see that we peaked out, we've talked about this time and time again, in May of 2022, and then we started to crumble through the end of 2022. Really, this was a giant correction more than a crash. We've seen crashes. If anybody remembers 2008, 9, 10, 11, that was a crash. This may be a bounce and a recovery. Can't really pay attention to this number yet. There have only been 13 closings so far this month. It's still very early in the month. We'll see if this continues on or up. If this were to actually fall like that, that would be an emergency situation.
Crashed.
That would totally be a crash. This number doesn't quite work, and I can't take the month of April off of this chart. So we have to look up here at the end of March. And what we see is that we had a $279 average per square foot versus February at $273. That's improvement. Things are getting more expensive. And you look at what's happening in the housing market itself as far as the size of homes, you can see way back in 2000, 1,600 square foot to 1,700 now. We were rising all those years, and we've kind of peaked out in this range here. So the size of homes is staying about the same. This was just kind of an interesting number that I was looking at this morning that doesn't really matter here or there, but cool data point. So with all of those stats in mind, the next thing that we want to look at is the balance between buyers and sellers. And what that's going to be as far as our different graphs here is going to be the contract ratio. So we're looking at February, March, and April. And what we see is a very cyclical pattern every single year up until 21 and 22, where we had this big peak and big drop. But more importantly speaking, it's good to see that in the month of March, we have a ratio moving up into a hot market, and you can see that denoted here by our colors. And in April, we're continuing to rise, much like we have in previous years past. Now, in 2018 and 2019, the market was a little bit warmer or more favored towards a seller, but that means also that we've moved out of a buyer's market, which would be way down here in the cool or warm, into more of a seller's market. Not a hot seller's market, but certainly more towards a seller's advantage. So our leading indicator here, the Cromford Market Index, shows that last year we dipped down right here. This is where our general market buyers space was. Again, if you bought in this time frame, November, December of 2022, you timed it pretty darn good. But the market has been moving up since, and it's right here at 136.3, 134.7, 133.5, really tiny movements. And that's actually tracking pretty closely with what happened in 2019. 2019, there was a lot of stuff going on, actually very similar to right now in the commercial space, where commercial wasn't doing so great, and it was starting to impact what was happening in the residential sphere. And then you see here this brown line, 2020 happened, and everything kind of just broke loose with the funny money, the free money, and the stimmy money, right?
Funny, funny, funny what money can do.
So let's look at our index in our gauges. So what we're looking at here, the market index, this is where we divide supply and demand together to get our speed. Where is the market going? And you can see we're sitting just above balance. 90 to 110 would be our balance range. And because there is more demand currently than there is supply, our market is moving in an appreciative fashion towards a seller's market. Now, is it a strong seller's market like anything in the past? Nope. But it is definitely leading towards a seller's market. What's really important right now is that you, as a seller, don't overprice your house, especially if it needs any type of updates, repairs, or modifications. That way, this demand that's out there, they see it and they know the deal is there. Your house will sell pretty quickly. Our average time on market, depending on your locale, is still under 60 days, but you have to make sure, again, to price accordingly. If you're looking back at last year's data, you're looking the wrong direction.
That price is sky high!
Because last year was way up higher than where we are right now. Either way, I hope that you stay informed, you look at the data, and you don't just read the headlines. If you're in the Phoenix region and you're looking for help in your specific situation, and you want to talk about what the data means and how you might be able to move forward, reach out.
Call me! Call me! Call me!
My contact information is in the comments and the description. Like and subscribe, do all those fun things. I look forward to seeing you in the next video.